So imagine watching like nearly 90% of the listed stocks in your portfolio actually go up in a single day.
I mean, that sounds like a fantastic trading day.
Right. You'd think so. But the main index still crashes. That is the massive paradox the KOSPI delivered to you on Tuesday, June 30.
Yeah, it's wild.
It really is. So today we are diving into this $5.5 billion market anomaly. We're tracking a historic foreign sell-off, unpacking some severe market distortion, and trying to figure out where all that smart money is quietly relocating.
Which is the big question.
Exactly, because if you picture the market right now, it is not a balanced scale. It's more like a gravitational black hole. You have these two supermassive stars just dragging the entire solar system down with them, regardless of what the smaller planets are doing.
The sheer gravity of what happened is honestly hard to overstate. Foreign investors dumped nearly 7.8 trillion won.
Wow.
Yeah. That is almost 5.5 billion US dollars in a single session.
It's just massive.
It's a staggering figure, but, the headline number actually hides the real story here.
Right, because this wasn't some broad panic, right? It wasn't like foreign capital was fleeing the Korean market en masse.
No, not at all.
It was a highly targeted exit from just two specific stocks. We saw about $2.7 billion pulled out of Samsung Electronics, paired with another $2.3 billion dumped from SK Hynix.
Which brings us right back to your black hole analogy. Because those two tech giants didn't just see a sell-off, they absorbed over 50% of the KOSPI's entire trading volume for the month of June.
50%, that is insane.
Right, and that's up from just 21% last year. So what we're seeing here is, well, it's severe index distortion.
So the index's performance is just completely decoupled from the broader market's health at this point.
Exactly. The vast majority of individual companies gained ground, but they were simply mathematically crushed by the immense weight of Samsung and SK Hynix.
Wait, so if those two companies make up half the trading volume, then buying a broad KOSPI index fund right now, I mean, that's not actually diversification at all.
No, it's really not.
It's basically just a disguised semiconductor ETF.
You've hit the nail on the head. That is the exact concentration risk that portfolio managers are sweating over right now.
I bet.
When two stocks control that much the daily volume, any slight earnings miss or, say, a supply chain hiccup from either company dictates the direction of the entire index.
Completely overriding the fundamentals of the hundreds of other companies listed.
Exactly.
Well, with $5.5 billion bleeding out of legacy tech, that capital is actively hunting for a new home, right?
Yeah.
And looking at the numbers, it seems to be branching in two very different directions.
Oh, yeah, the split is super interesting.
First, we saw the KOSDAQ surge over 8% to reclaim the 920 level. And the buying was actually so intense it triggered an upside sidecar circuit breaker, just to halt program sell orders.
It is an impressive jump for sure, but we have to attach a massive caveat to that KOSDQ surge.
Okay, what's the catch?
You need to look at the trading volume. Despite the price jumping, the daily trading volume actually plunged below 1 billion shares for the first time this year.
Oh, wow.
Yeah, hitting just 556 million shares.
So it's not a massive wave.
Right. What does that tell us? It signals cautious, low-volume bargain hunting in a market that was heavily oversold. It is not some overwhelming wave of new momentum.
Got it. And the second direction that fleeing capital is taking is even more fascinating to me. It's landing in one of the most volatile sectors possible, digital assets.
Oh, yeah.
We are seeing traditional Korean brokerages, quietly but very aggressively, making moves into crypto. Like, Kiwoom Securities is in early talks to acquire a stake in the crypto exchange Bithumb.
Which is huge.
Yeah, and that follows Korea Investment Securities taking a 20% stake in Coin1.
This is where we need to look at the mechanics behind the move, right? Like, why are traditional legacy brokers suddenly buying up crypto exchanges?
Right, why now?
It's all about next year's security token offering, or STO legislation. Legacy brokers have the massive client lists and the capital.
But they don't have the tech.
Exactly. They lack the blockchain plumbing. Buying these crypto exchanges gives them instant access to the digital infrastructure they are going to need to actually trade tokenized real-world assets once they become legal.
So to tie this all together for you, what we saw today wasn't a broad exit from Korea. It was a massive sector rebalancing.
A huge one.
Institutional money is exiting the top-heavy semiconductor giants and instead positioning for small-cap recoveries and laying the groundwork for digital assets.
Yep.
The immediate thing to watch tomorrow is whether foreign investors continue their historic sell-off in Samsung and SK Hynix, which will really test if this broad market rotation actually has legs.
And looking at that rotation, it leaves you with a much bigger question to consider, I think.
Ooh, what's that?
Well, as traditional equity indices become increasingly distorted by just one or two massive companies, and as legacy brokerages rush to buy up crypto infrastructure, are we actually witnessing the slow death of traditional stock indices in favor of tokenized decentralized assets?